I think it's actually really important to either go find a job in that industry or, apprentice with someone. For example, if you want to get into the real estate business, go find a fund to work at, provide some type of value as an employee of that fund. If you want to go start a tech company, go work for a startup for a few years first. Learn all the things that go wrong so that you don't do that.
Welcome, everyone, to the Road Less Traveled Show. This is a show about people that were successful in a previous career and left that career to go down a different path. I'm your host, Richard Coyne. On today's show, we have Elijah Brown with us. We're so pleased to have you, Elijah. Welcome.
Thanks so much, Richard. It's a pleasure to be on.
Fantastic. So, Elijah, if you can you talk a little bit about your background and kind of what you used to do and that type of thing, and then maybe lead into what you're doing now?
Sure. Well, I got involved in real estate 7 years ago while I was still in college. Bought a couple single family homes with my best friend and my cousin. And then I actually ended up getting a job right out of school at a real estate investment trust, a REIT. And it was there that I learned a lot of important skills about analyzing cash flows and presenting opportunities. And on nights and weekends while I was at that job, I started putting together my own deals in the multifamily space. And so I was raising capital from friends and family and coworkers on the side, and did that for about 4 years. And that portfolio ended up growing large enough to the point where now I can, sustain myself just running that business. And now I do that full time through Goldhawk Capital.
Awesome. I think I saw that you have some, you're in the reserves. Is that right?
That's right. So I ended up joining the Army to pay for school.
Okay.
I went to the University of Southern California, and It's like a $300,000 or $400,000 tuition. And I showed up and didn't have the money to pay for it, and wasn't really interested in student loans and going into debt. And so I walked right down to the ROTC office, and they wrote on one of those big presenter check things, like $400,000. Congratulations, you've got a pulse. Just sign here. And I signed. Now I'm about 5.5, 6 years into my 8-year contract.
Awesome. That's great. So, and your branch is the Army? Is that right?
That's right.
Okay. Gotcha. Actually, my father-in-law was Air Force, and he did ROTC in college himself. And then he went on to a 21-year career in the Air Force and retired from there. And actually, he passed away in 2021 and actually was just buried at Arlington with full military honors. So that's pretty cool.
Wow.
Pretty cool. Yeah. So, all right. Well, that's great. So, yeah, you've done a lot in, just 7 years, like you said. So, what was that like, just being in college and owning a house? It's crazy.
Well, I thought I was going to be an investment banker. And so I was going down the whole recruitment pipeline of, applying to like every single possible place I could. I think I sent in like 300 or 400 applications my sophomore and junior years, just to try to get some type of banking job. And I actually got really lucky and ended up interning at a hedge fund. And I realized after working there that it was not really, my cup of tea. It was the market's very unpredictable, and there are a lot of variables, and it's very stressful. And so late one night, I fell down a YouTube just watching a million different videos on real estate. And I did that for a few weeks before I realized I'm done consuming content and I'm ready to go buy a property. And that's what kind of set me off on my real estate journey. Went out and bought that first single family house with my cousin and my friend because I didn't have enough cash or credit to do it myself. And then we just kept doing that over and over again.
Now, were you house hacking? Did you live in the house while you're going to school, or was it somewhere else?
No. So I was going to school in Los Angeles. Because it's a very expensive market, and not very landlord friendly either.
Right.
So we actually bought out of state. We went to Orlando, Florida, and we bought this tiny, crappy little $140,000 single family 3-bedroom house, and we put a tenant in it, and that was it.
Nice. So just back to the story about it wasn't your cup of tea. So I actually went straight from undergrad to graduate school. I did an undergrad in business and finance and just a general business finance degree. But I did an MBA in finance. And as I was graduating, I did some, started going on interviews, and I went to talk to, I went to school in Washington, D.C., and there was this
Okay.
bond company. And, I went in there and I had an interview with I was probably the managing director. And this woman asked me, so why do you want to work here? And I just was like, oh, okay. So I pulled out my trusty college. Oh, I want to leverage all the stuff that I've been learning in grad school, and I feel like I can make contributions. And she just was like, you want to make money? I was like, oh, okay. Well, I totally blew that interview. So yeah, that didn't go any further. So anyway, but yeah, it's funny how you wind up pursuing something, and sometimes it isn't what you thought, and isn't what you really wanted. So that's cool that you found a better path. So if you would elaborate a little bit more about the path you're on now.
Sure. So right now, and I used to do a lot of actively lead GP managing deals. And what that means is that I was literally going out and finding the properties. I was finding the investors, negotiating with the bank, hiring property management, dealing with contractors. And that was a lot of work. I did that for about 6 years. And now, we had about 10 full cycle deals, so 10 exits. And
Wow.
I decided to make a bit of a lifestyle change. And so my girlfriend and I, we bought one of those Mercedes Sprinter vans. And we spent 2 years renovating it into what's now our home that we travel in full time. We're currently in Colorado. We were previously in Mexico. And so my business model had to change a bit because I can't be boots on the ground. So what I'm doing now is I'm trying to focus more on being a really good passive investor. And so for me, passive investing, I could just write a check to one of these really good deals that I find. Or what I prefer to do is I set up a completely separate LLC, and I actually raise money within that LLC, within Goldhawk Capital. And then we write a larger check to those deals. And with those checks, we're able to negotiate better terms on the deal. So we're, instead of writing a $50,000 or $100,000 check, my company will write a, between $1 to $5 million check. And then we'll say, in exchange for giving you guys so much money, we'd like a higher preferred return, and we'd like a better profit split at the end of the deal. So I don't want to split the profit 50-50. I want it, either 80-20 or 90-10. And that ends up giving me a higher rate of return on my passive dollars. So that's the core of my business now. We work with a number of different sponsors and operators. We try to focus on the Phoenix and the Dallas markets, and specifically multifamily properties.
Okay, gotcha. Makes sense. So Elijah, as you think back to, I don't know, maybe it's your early REIT days or college, or I don't know, maybe even your Army Reserve days. Is there a funny story you can share? Something that happened to
you? Let's see. Funny story. When I got into the multifamily space, I had done a bunch of single family deals, and I don't think I was really prepared. It was almost like I was naive enough to get involved without having really like any experience. And that was great. I'm so glad that happened. I had rose-colored glasses on, and, a mentor at the REIT I was working at convinced me that I needed to get into multifamily. And so I set off on this journey to find some type of multifamily property in Florida where I was investing. And I found one, and I quickly put it under contract and ignored all the red flags about it. And, the property was a total train wreck. It was just like every little issue you could possibly imagine: mold, foundation issues, bad tenants on drugs, horrible property management, just the whole 9 yards. And I had to buckle down and focus and make that work while I was still at a full-time job. And so I'd be, leaving the office, to take a call in the middle of the day to deal with emergencies. And I just had to make it work. Now, thankfully, we were in a very hot market. We exited that deal in 3 years with a 60% IRR for all the investors that were involved. But it's not really a funny story, but it's just like for those trying to get into the multifamily space, I would not recommend just trying to go out and like make a property work yourself right off the bat. It's risky. Looking back at it, it's kind of risky. I'd recommend trying to partner with a larger firm that's already doing it and doing it well. Maybe start off as a limited partner, and then perhaps, if you're really interested in being on the manager side, come in as a co-GP on a deal, provide some type of service like asset management, investor relations, underwriting, do something valuable. Because when I tried to do it myself, while I was like right out of school in my first job, it was extremely stressful and very risky as well.
Mm-hmm. Yeah, that makes sense. Our first property was the C property, and we learned we don't like C properties, so we're not doing them anymore. So yeah, definitely. It's interesting. Thankful. We're so thankful, and despite the headaches, that got us into the game. And that's kind of obviously that was a goal and objective and a mission that we were driving toward to really start doing these multifamily syndications. But again, happy to graduate from the C class into the higher classes. So yeah, very cool. So is there a kind of deciding factor that said, look, I'm gonna leave this REIT. I'm gonna go do this on my own. Anything that kind of really triggered that for you?
My multifamily business was going well. I had already approached 800 or 900 units. And so, it's I guess the writing was kind of on the wall. I can't really discuss the specific circumstances around me leaving the company at this point. But it was at a point where I could just run Goldhawk full time, and that was always my dream as well. So
right.
Yeah.
Okay, nice. Yeah. Certainly understand that. Obviously there's some stuff that you can't share, but
right.
But cool. Well, it's pretty impressive that you're able to do that. So very nice. Now, as you really were kind of shifting into, so maybe as you started shifting from perhaps some of the single family stuff into the multifamily stuff, there's some obstacles you had to overcome along that way?
Definitely. So it's a lot different in terms of, you want to go find a multifamily deal. All the good ones aren't really just listed on the market. You can go on places like LoopNet and Crexi, and they're there. Like, deals are there, but they're not like the good ones. The good ones are all off market. We call them pocket listings, or just not for sale. And so you have to make really good relationships with brokers, and it's kind of a catch-22, because if you can't prove that you've closed before, or have the ability to close, and that you're a good guy to work with, they won't give you listings. And so it's like, how do you actually get in without having some kind of track record or trust? So it takes a lot of, building trust and working with some of the smaller brokers in the beginning. You can't just start out with, the 50 or the 100+ unit complexes, in a great area, because the top brokers are getting those deals and they're sending them to the best firms because they know they can close. So, I started out with working with some of the brokers working on the smaller C-class multifamily buildings. And that's how I was able to get in, prove that I could close on deals, and then, start getting, the pocket listings or the off-market deals in my inbox on a regular basis.
Okay. Yeah, makes sense. It's definitely an interesting thing. We've bought on market, we bought off market. Off market never really is truly off market, because you're still going through a broker pretty much, because again, the brokers control the market. I mean, it's not like the single family houses where you can do a yellow letter campaign and really try to get some owner's attention. I mean, again, it's not impossible. Don't get me wrong. It could work, but the chances are pretty slim, because again, brokers have a staff of people whose job is to do nothing except call all day long and say, "Hey, have you thought about selling your property? How about now? How about now?" So you definitely have to have those broker relationships. That's a super important part to it.
And something to note about my current model is that I don't have to worry about that anymore. The deals that I'm investing in, these sponsors are getting first look at the best deals because they are the ones who are closing. Think about a company like Rise 48 Equity, or Lone Star Capital, or REM, Sterling Rhino, all these sponsors in the space. Neil Bawa, they're all getting first look at the best deals because they can close. They're large enough. They have a track record. They're known in the space. And so I'd say, I'm getting in on the absolute best deals now, best off market deals, and I don't even have to do the work to do it. Now I am
Hmm.
paying fees to these people for doing it, but as I mentioned before, my check size is able to negotiate better fees for my
Right.
investors.
Right. Nice. Yeah, that makes sense. So can you maybe tell me about your first victory that really said, hey, look, this is a very viable path for me to be on. Okay, maybe it was after you already left the REIT, or maybe it was, as you were kind of, starting to see that ramp up while working at the REIT. What was kind of a first victory you can share?
It's funny because it's such a long-term game and it's so slow. It's not a get rich quick at all.
Hmm.
But I could see it start to snowball and accumulate. And I've been doing this for about 7 years now, and I didn't have full cycle exits until about 2 years ago. And
Hmm.
so for a while there, I was like, will this work? Will it not? I don't know. But the market's certainly going up, and I had been keeping track of my property values along the way, just based on comps or cap rates in the area, and so I was keeping track and understood the impact that this was having on my net worth and my cash flow. And I was like, oh my goodness, like people my age are working a job, they're paycheck to paycheck, they're probably in student debt, and I'm sitting here, feeling like I'm on top of the world. And then I had my first few exits, and I'm like, oh my goodness, not only am I not going to pay taxes on these because I'll do a 1031 exchange, but now I have like realized profits and I have a proven strategy. I think it was really because the first few deals I didn't really take performance fees for those. I didn't take a promote. I was really just trying to get into the game. I didn't even know what those were. But on the sixplex, that first multifamily deal that I did have a performance incentive, a promote.
Hmm.
And so when we sold it at such a high valuation, I got my check and I was able to roll that into another deal.
Hmm.
And that felt great. I was like, wow, like all that effort and time I spent doing that was so worth it, because now I'm going to have X number of hundreds of thousands of dollars just working for me passively for the rest of my life, doubling every 5 years and producing, an 8 to 10% cash on cash for the rest of my life. And so that was a huge like win for me. That
Yeah.
first deal getting sold. So.
Right. Very cool. Nice. Yeah, that's some nice numbers that you talked about. So very cool. So more recently, is there a funny story you can share? Something recent that's happened to you?
Um, you know, eh, as my business model has switched over from less of the active stuff to more of the passive stuff, um, less funny things and less issues have been happening because I've outsourced a lot of those issues and a lot of that management to these seasoned sponsors. And so, what I'm focusing on a lot more now is like traveling, enjoying my life, and then
Hmm.
also, helping people generate their passive income and wealth through
Hmm.
these investments. So, um, no, I wouldn't say anything like funny has really happened. I mean, it's interesting with the fund to funds model, which is what I do.
Yeah.
Um, some deals they pop off and people love them and they want to get involved, and some deals you get like no responses. So I'll
Yeah.
send a 506B multifamily deal out to my private network of people that I have a relationship with, and the cash flow will be like 4 or 5%. And, people will be very excited about it. They'll be like, oh, love this stable multifamily, good multiple, love the operator. And then I'll bring them something, like an Airbnb opportunity that's, publicly advertised. So like I can post it on Instagram and everything. The
Hmm.
cash flow is like 10 to 12% with a great multiple. And it's a very sexy type of deal. And although it is only for accredited investors, the response is just not as high as with the conservative multifamily stuff. So that's just been
Right.
a little surprising. I've been
Right.
meaning to test the waters with some other high cash flowing strategies like laundromats and RV parks. I haven't gotten there yet. I've been trying to focus on the multifamily because that's what my investor base is really interested in. That's what I've been educating them on for years now.
Right. Right. Yeah, it is interesting to see that, there's sometimes people look at 10, 12% returns. They're like, oh, that can't be right. There's no way. Well, yes, it is. It's very possible. It's very possible. But sometimes people feel like, the other lower return is the one that's more realistic, and therefore they feel more comfortable with that.
Sure.
And we've seen it as well. We certainly have, and it's crazy. So, all right. So in your new direction, you're taking your company where you're really, more passive, taking these, bigger checks and investing with operators that and trust and whatnot. How's that going? Where do you see that journey taking you? Do you feel like you're continuing in that path?
It's great. It's funny because now my job is like it's less real estate, a lot less real estate, and more sales and marketing and investor relations. And it's like I'm learning like a completely new skill set. Lead generation, outreach, lead management, email marketing software, and utilizing AI to help me with that too. It's just a completely different business, and I actually love it. I think it's great. I really enjoy making relationships with new people, helping investors achieve their goals through our products. And it's going well so far. I think, and I try to tell people this in terms of like what value you can add to a deal to make the most money for the least amount of effort. It's really capital raising and investor relations. That's the best bang for your buck. It depends, but in a typical deal, we're making anywhere between 10 to 30% of the capital that we raised in fees over the lifetime of the investment. Just for making introductions. And that's a significant amount when you consider that, a real estate agent will make, 3 to 6%, a yacht broker will make 10%. And, here we are doing, sometimes 3 times that. And so we've realized that our efforts are they pay the most when we are in this capital raising and investor relations role.
Yeah, makes sense. So Elijah, is there something you do perhaps through personal or maybe through your business that you can mention and talk about briefly that you do to give back in a way to help others in some way?
Yeah, absolutely. So we're big on education. Educating people. It creates investors, but it also creates better, more informed and happier people, because then they're able to achieve the types of freedom that we've been able to see through our own investing. And so I post on LinkedIn 3 to 4 times a week with something that's educational, real estate related, with some lessons, and then we send out an email once a week with more tips and tricks or real estate related education as well. And so, to find that, just add me on LinkedIn. It's linkedin.com/in/Elijah W. Brown. If you go to my bio, you can click the connect button and then you'll start seeing my content, but also, there should be an opportunity in all my posts. I have a link that allows you to sign up for my email list where I can send you additional educational stuff.
Very nice. Very nice. So we'll put links into those things you mentioned as a way to reach you in the show notes. So that's great. So is there something you talked about now that you're kind of shifting more to marketing and investor relations? Is there something you've implemented that's really kind of helping you grow that side of your business?
Definitely. There's a few different things. So number one is thought leadership. So I never used to go out in a public forum like this, like a podcast, or go to conferences and, stuff like that. So I've started doing more of that, more of the, providing my thoughts on LinkedIn, providing my thoughts on podcasts, stuff like that. So that's one. And then also the, through the lead nurturing and the email management as well. We're now sending out a lot of engagement type of content where we want to provide our investor leads with educational content, and then also opportunities to invest in deals, and that gives us a platform to interact with those folks.
Okay, that makes sense. Elijah, what advice would you share with somebody who's considering making a path change?
It just any path change.
Effectively, that somebody's on this maybe direction for how they're earning their income now, and they're considering making a shift.
I think, and a lot of people tell you to just go jump in and do the thing that makes you passionate. I think it's actually really important to either go find a job in that industry first, or apprentice with someone, or do a lot of learning before you just jump in, because that will help you cut down on the number of mistakes that you make. I mean, I worked at that REIT for 4 years, and I can guarantee that had I not worked there, I would not be doing as well with my my real estate career. So definitely important. If you, for example, if you want to get into the real estate business, go find a fund to work at, provide some type of value as an employee of that fund. If you want to go start a tech company, go work for a startup for a few years first. Learn all the things that go wrong so that you don't do that.
Right. No, that's great advice. Definitely there's a saying that says, I think it was Jim Rohn that said something to the effect of, learn from your mistakes. Well, yeah, I'd rather learn from the mistakes of others and therefore accelerate my growth by having a strong pattern of what you can do well from going forward. And again, that's actually another piece of advice that I've heard many times as well. And that is that, look, you don't have to quit your W-2 job. Or maybe it is that you just change your W-2 job into one of those fields you just mentioned. You're still earning a solid income, predictable income. You're learning what the space you're trying to really get into. And then when you're in a position to, maybe you've got the built up of savings and, emergency fund plus savings to carry yourself and things like that, you're in a better position to really, break out and really go full time into that new space. So good.
Absolutely.
Good. Nice. All right. So you mentioned your contact information. I think we'll actually, if you don't mind, just recap that again real quick. How best
sure,
to find out more?
The best way to get in touch with me is to add me on LinkedIn. It's Elijah Brown, or I think the handle is Elijah W. Brown, and just connect with me there. There are also in my bio, you'll see the links to a few resources that I offer for free. One is an ebook on essentially how to passively invest in multifamily deals, and then the other one is a free underwriting model. So it's an Excel model with a video tutorial. And then, in all my posts that I make, I usually have a link that allows you to sign up for my email list as well. And that's the way that you can start seeing my deals and start getting, educational content on a weekly basis.
Excellent. Good. Well, certainly, again, we'll put those in the show notes so that people can reach out and say hello and connect with you and stay in touch. So good deal. Well, we certainly want to thank you, Elijah, for being on today's The Road Less Traveled show. Appreciate your time, and thanks for being our guest today.
Thank you very much, Richard. It was a pleasure.
Absolutely. So again, thank you, folks. Please continue to give us a 5-star rating so we can bring you more great content today, like our show with Elijah Brown. And we also want to remind everybody of a couple things Park Capital Partners has going on. First of all, we have the Park Capital Partners Value Add Fund, which is a 506c fund open today to accredited investors. And we also have the Park Capital Partners Foundation, that is a 501(c) nonprofit that we created as a way that we give back. So the way that works very quickly is, first of all, we fund the operations of it. So all the money donated to it goes to do its best work, which is to help others. Second, we donate personally. Third, we donate corporately. And finally, when investors invest with us, we make a donation to honor that investor to a pre-selected list of different charities that the investors might care about. For example, one is Wounded Warrior. So we certainly thank everybody. We want to please encourage everybody to reach out. Call Bill and myself, reach out to us at parkcapitalpartnersllc.com. Love to have a conversation with you. And again, thanks everybody for joining. Remember, folks, the road less traveled may be calling you. We recommend that you listen and take action. Thanks for joining.